Hello, this is Working Dad Trader. Have you ever heard the phrase buy the dip? Well, in this video, I'm going to explain to you why just buying the dip is not always such a great idea. Okay, so the phrase buying the dip gets bounded around a lot on the stock market scene, especially on YouTube, on a lot of social media sites. They just say buy the dip, buy the dip. And what buying a dip basically means is buying a stock when it has dropped in price, quite often from a previous high. And the belief of these people on why this is a phrase is that when it's dropped, then it's believed to be a bargain in price and a short-term blip in the stock's movement, and that it should rebound back up and you'll make a profit. The chart you can see now is of Teladoc, and this is just an example. The blue arrows indicate where the stock has dipped and then carried on back up. As you can see on the chart, it has been making higher highs and higher lows all the way up in an upward trend. And that's a really good thing. If the company's a really good company and the stock's on a tear and it's going on an upward trend, then happy days. It's a really good time to buy the dip. You're going to make money, especially if you're a day trader or a long-term trader. It's fantastic. But what happens if you don't do any technical analysis, you don't even look at the charts and you just buy the company because everyone's saying buy the dip, buy the dip? Well, you can also work in the wrong way and a company's not doing so well, or the company's had some bad results on their earnings lately and it's on a downward trend. You can really get in trouble. If we look at the same chart again, the Teladoc chart, in this example now we're in a downward trend, and if you keep buying the dip, which is the yellow arrows where I pointed, then you can easily lose money if you start, especially if you bought at the top on the yellow arrow and it's going down and it's making lower highs and lower lows, then you're just losing money and you've got it completely wrong. This is Peloton, another company that on social media people have been raving about. Again, if you bought the dips, which is the pink arrows, again, you're in big trouble if you haven't looked at the technical analysis of the charts. It's on, obviously you can see it's on a clear downward trend, and if you bought at the top, and you're again losing big money as it's making lower highs and lower lows all the way down to the very bottom. So the lesson from all of this is don't just blindly buy the dips of these companies. Remember, it's really important to do your homework on the company, do your technical analysis, and remember the key is the trend is your friend. You want to look for an upward trend in the charts and then buy the dips. Okay, so remember the key is to know which way the stock is going, know the trend of the stock, whether it's an upward trend or a downward trend, or it might just be going sideways. That is really key. There are so many people out there that lose so much money because they just don't look at the technical analysis of the chart, and they buy when it's on a downward trend, and for a long time they will just be in denial that they've got it wrong, and it will just keep going down, and they think, oh, it's gone back up, I'm alright, I'm saved again, it goes back down again, and they don't sell, so it's really down near the bottom where they've made a huge loss. And I just don't want you guys to do the same thing because it is so common out there. I've also done a little video before in the past of when you could buy a stock. You might find that helpful. If you want to check that out, then I'll leave a link. And yeah, thank you very much for watching, and I hope you got something out of it. I don't want to make it too long today, so I hope to see you soon. Thank you very much.